Hey guys, I wanted to do a recap of what we talked about yesterday with broadening formations because we just kept getting interrupted so much, and kept losing my train of thought, and I don't know if I really got my point across. So when we want to draw broadening formations, we want to start with the highest time frame, and we typically want to start with the more recent broadening formation. So where do we see? Where's the first place that we start to see a higher high and a lower low? You could say there's one here, right? Right there. And we would be remiss if we didn't notice this enormous broadening formation here, which we could draw like this, by the way. And I think we should. Or we could also draw like this, because there's a high to a higher high. And then you see what starts to happen here, where these the tops and bottoms of the triangles start to form areas of support and resistance. And we go here to a lower low, right? Or we could also do like this. Okay. So now we have broadening formation and a broader broadening formation, a more recent broadening formation. Let's zoom in on some of this, and actually, since this is the monthly, and we want to sort of see this a little bit more clearly, let's do this. Let's change. Um, I'm going to change this to a width 2 on all of these, so they stand out as the monthly broadening formation that we see on the monthly. Okay. You can change them, you can change their color, you can, whatever it takes to help you visualize this better. And last one. Okay. Now let's zoom in here on the weekly and see if we're seeing the same broadening formations. And we are, and we can even adjust them a little bit, although I don't think we need to. Um, right there. Okay. What do we see here? Do we see a recent broadening formation happening here on the weekly? We do. Um, let's go ahead and draw that right here. There's a high and a higher high right there. And you can say that that's a low to a lower low. Right about there. Okay. So now we have this broadening formation here on the weekly. Okay. Let's go into, and actually, let me make this one a different color. Let me make this, I don't know, cyan. Okay. Cyan. Let's zoom in some more. Let's go to the daily. Okay. We're still seeing that same broadening formation, right? On the weekly. If we go into the daily, we do see there's one here. Right? And we can go into the hourly. And like if you see this didn't doesn't look right here, for example, on this daily one. Okay. I'm just gonna start fresh. Once we zoom in here on the hourly anyways, um, you start to see another one forming, which was all day yesterday, really. But let's go ahead and see if we can adjust this other one here. Really, where you see a high to a higher high, I guess here. which is similar to what we were looking at earlier. Right? And then here. Boom. So there's this is the most recent broadening formation, and you can see when we zoom out how it fits in the great scheme of things, right? So where are we in this broadening formation series? We're kind of at the top of this triangle, right? Breaking through. Could we go back through previous range? We certainly could. Could we bounce off of this and continue up? We could. So this is why we draw these, because these are like price targets. They represent areas of support and resistance, and we do see price tending to react off of them like that. And as we zoom in to the smaller time frames, then these other broadening formations are the ones that are in effect. And why do we care about these broadening formations on the smaller time frames? Because we have conflict. So since we know that we're up on the year and the month, right? There's the month, the yearly is the same, there's a green bar. If when we go down to the week and the daily, we see these red bars like this, there's time frame conflict, right? And going back through previous range, off the top of the try, time frame conflict, okay? And on Friday, setting up a new broadening formation as the participation group of the 1 hour participation group struggled for control. Who was in control? Well, it depends on what time of the day and what part of the broadening formation you were in. But there was definitely conflict, right? So there's not full time frame continuity to the upside, which would begin here, right, or where one of these opens was actually, I think, there. We have conflict, and we're going back through previous range. So when that happens, we look to the hourly for who's in control. So we look to trade those signals off of the hourly if you're going to even trade it at all. Personally, I would say stay away from something that is in conflict. Try to trade signals back into continuity. But here, for example, if we were trading this, we would look to the hourly for who's in control and take those signals off of the hourly, and then confirming, looking for those confirming signals on the smaller time frames. But you would have got chopped up, you would have got beat up, which is what happens at the beginning of price discovery, because even though it is broadening at the beginning, it's a lot more narrow, and there's a lot more of this back and forth, up and down, until you get out farther along the broadening formation. Then you see these big swings, like what happened here off the higher high, going back all the way through previous range. And frequently, what happens when it comes off of that second lower low is it tends to go pretty aggressively back up, which is what happened here. So, for example, in this 30 minutes, we went off the bottom. We had this big drop here, right? Went off the bottom of the try. And as we continue to zoom in, we see that giant reversal there, that giant reversal bar happened right there off the bottom of the triangle. And we start looking for, now this is hindsight 2020, right? But this is how you train your eyes to see these things. You start looking for reversals off the bottom or back through previous range. We had one here. There was a doji, little hammer doji reversal. Didn't make it all the way to the bottom, but back through previous range. And then this fiver here, that was a 2-1-2 continuation. And we talked about this, I think, a lot with the overlays. Back through previous range up to the top of the try, 2-1-2. Off of this would have been a good trade. You might have got stopped out here, depending on where you put your stops. Um, if you had been trading this, if you had used that 5-minute signal to get in, expecting there to be a reversal off the bottom of the triangle, expecting a 2-2, you knew the top of the 2 was going to be all the way up here. So if you're trading this intraday and you're trading off the 5-minute signal right there, and you put your stop right there, you wouldn't have got stopped out, and you would have stayed in the trade, um, and continued until you had a major reversal against you on a higher time frame. two, 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 two down on the higher time frame. So maybe you would have stopped out there. If you were looking at the 30s, would you have got stopped out there? Two down, two up, two up, two up, two up. No, you would not. You see? So this is why we still look for reversals on the higher time frames against us. Here we would have been watching this whole 30, but it's still a two up on this time frame. So technically, this is still two up, two up, two up. Even though it's in conflict, it's two up. We want to trade. Do we want to add when there's conflict back into time frame continuity? It's a little riskier. I personally haven't gotten very good at it, but yeah, that's the idea, right? So where would you do that? Inside of that 30, where it's going to where the change in continuity back into full time frame continuity confirms the two up on the next 30. Let's look at that action on the 15ers. So as soon as this went two up on the 15er right there, you could have added. And if we go to the fives, two, two reversal on the five, could have added there. And as you can see, if you had added on that 2-2 reversal, you would have gotten into some angst as it reversed against you back here, um, and looking like it was going to go Momo star. But if you had put your stop there, you wouldn't have got stopped out, and it would have kept going. So does that? I'm not telling you how to trade this. I'm not telling you what to trade. I'm just telling you the sort of things that you need to be aware of and the things that you need to be looking for to keep from getting slaughtered. So if you find yourself at the beginning of price discovery, you're probably going to be getting slaughtered, unless you're trading on a higher time frame. Um, when you have mother bar problems like we do here, um, you see this back and forth, this real whippy action. But even then, if you're trading intraday and you know to expect this sort of action, and you have your triangle drawn, then you know that when once you've made a low. This could have been a lower low. You made a lower low off of something off the bottom of the triangle. You start looking for reversals back through previous range, and that would have been one right there. See, so a 2-1-2, technically 2-1-2 reversal up again on the 5, 2-1-2 reversal down on the 5, right there. So just some trading ideas and just some ideas as far as how to draw the triangles and how to use them once you've drawn them. I think this video has gone on enough. If you have any questions, leave them in the comments. I hope you enjoyed it.